The topic I want to take now is cost or cost and management accounting. This subject deals majorly on cost. What is cost? In general language also, cost is the amount of money you spend for manufacturing a good or delivering a service. That is the cost. So the amount you pay for the service or the product is called as your cost. And why cost is important for a company? For example, I have a client to whom I need to provide a product or a service. The client is asking to deliver the good at say 50,000 rupees. Okay, he is asking to sell at this price. But the amount I spent to manufacture the good is say rupees 60,000. Will I be able to sell it? No. If I sell a product for which I spent 60,000 and I am going to sell it at 50, I will incur a loss of 10,000. So this is going to be my loss. So that is why before giving a quotation to client or before hiring an employee, you need to ensure what is the amount I am going to spend and on which how much I am going to receive the benefit. And every given time, the amount you are going to receive should be more than the amount you have spent. So in this situation, if I am going to spend 60,000, I may put my money or the sale price as say 70,000 or anything more than that, so that instead of getting a loss, I will get a profit. So that is why ascertainment or calculation of cost is important, and that is why you have this subject called cost and management accounting. Before ascertaining this cost, we need to know what is this cost, how to classify costs, what are the elements of cost. So the topic I want to take you forward is elements of cost. Elements of cost. So this is initially classified into three. Material, labor, expenses. Material is a physical material you use for manufacturing a product. If I have to give an example of manufacturing a bench, in your classroom you have a bench. To manufacture this bench, say for example you need 3 kgs of wood and 2 kgs of steel. So my material is 3 kgs of wood into whatever price of the 3 kgs plus 2 kgs of steel into whatever is the price. So that is called as material cost. So the material cost means cost of raw material required to make a product into a final product. In our example, the wood and steel are the raw material used for manufacturing. And then labor is the worker or the employee who spent time from converting the raw material into the finished goods. It may be the wages you pay in the factory, which is called as the labor expenditure. And finally, expenditure. So there may be any other expenditure in the factory, like the electricity of the factory, unloading charges, loading charges, machine expenditure. Everything will fall under expenditure of the company. But these three elements are further divided into direct and indirect costs. So this material can be direct and indirect expenditure materials. So if I am able to identify the material in the final product, then it is called as direct material. So identify in final product without any additional expenditure again. So as I said, 2 kgs of wood, 3 kgs of steel into whatever is the per kg value will give you the final product. At the same time, to manufacturing the bench, I need to put Fevicol also. For each bench, I need to put 10 drops of Fevicol. Do I need to calculate that? For calculating it, I will spend more money than the value of the Fevicol. So I choose to ignore it. That is called as indirect cost. So you don't want to identify, not identify. Right? For example, to stitch a shirt, button may be a indirect expenditure because I don't want to calculate this. But if this button is made of gold, will it be indirect or direct? At that time, I will calculate 10 buttons into whatever is per gram gold. Then it will become a direct expenditure instead of an indirect. So if the value is more, you want to identify it with final product, direct material. If the value is less, you don't want to identify with the final product, indirect expenditure. Same way, labor. The labor who worked on the product and you are able to identify with the final product is called as direct labor. For example, the actual labor who spent time on the product. To manufacture the same bench, one labor need to work for 3 hours. And per hour payment to the labor is 100. So 300 rupees is the direct labor cost. DL I will write for direct labor. I can identify how much direct labor expense on the final product. Identify with final product. There may be an indirect labor in the factory. I will call it as IDL. Indirect labor. Let's say there is a supervisor in the factory. This supervisor will manage 10 laborers, whether they are working or not, whether they came to office or not. He is not actually working on the product, he is just overseeing all the labor. His salary is not going to the product, so it is called as indirect labor. There is a person who is giving tea to all the laborers. Even though he is getting salary or wage, that is not added to the final product. So, this is not identified with final product again. Not with final product. Right? Then again, expenditure. Other than material and labor, there may be some other expenditure which are incurred in a factory. Expenditure may be rent, electricity, some other expenditure. So even these expenditures can be direct expenditure, indirect expenditure. First I will take the example of direct expenditure. Suppose this item, whatever is there, has a design and I purchase this design from a other product. For every product manufactured, I need to pay royalty or a copyright to the person who sold me. Then it will become direct expenditure. For every book I print, for every bench I make, I will pay 100 rupees as royalty to the designer. Then I can identify 100 rupees for each product as an expenditure. So this can be royalty, machine charges. Someone gave you a machine and for each product manufactured you need to pay for the machine charges. That can be direct expenditure. And indirect expenditure can be anything else in the factory. Example, rent of factory. I will pay rent irrespective of the products, electricity, etc. All these things are called as indirect expenditure. Right? Then, after doing everything, all these things are in your syllabus. Like you have one topic called as materials, you have one more topic called as labor, another topic called as expenditure. Then all these direct material, direct labor and direct expenditure together is called as direct material plus direct labor plus direct expenditure is called as prime cost. And all these indirect material, indirect labor plus indirect expenditure is called as overheads. So you cannot tell how much is the actual expenditure, overhead expenditure on all these products, but you will just calculate. Suppose rent of the factory is 30,000. In a month, I will manufacture 10,000 products. So 30,000 divided by 10,000. So 3 rupees per product is the rent of the rent per product. That is not the actual one. That is because of the overhead allocation. So this is how you are going to initially ascertain the cost. Then the next step what you will do is, so whenever a person come and ask you for a quotation to manufacture a good or service, as I said, I told the customer that I will charge 50,000 for a product. After committing to the customer, I got to know the product price become 60,000. So I need to incur 10,000. If I call him and say it is going to be 60,000, so you pay another 20,000, he will not pay me. So whatever you do, you need to do before doing. So before you are giving a quotation to someone, you will prepare a document called as cost sheet. If someone asks you to manufacture an item, you will give a quotation. The quotation you will do is, first you will put direct material, whatever be the amount. Say, in our example, I will put 2,000 rupees is the direct material cost. Then I will write direct labor we pay wages. Say another 1,500 rupees. Just I will add direct expenses. What are the examples we have told about direct expenditure? Royalty, copyright, machine charges, etc. Say 1,000. The total of these three, 2,000, 3,000, 4,000, 4,000 and 500 rupees. This is called as prime cost. Then you will get overhead expenditure. So this overhead expenditure where you spent will determine the nature of the overhead. Suppose if the overhead, the indirect expenditure incurred in factory, you call that as factory overheads. The indirect expenditure you incurred in factory is called as factory overheads. Factory overheads. Because this is important. Even though rent is not direct, without paying the rent, you cannot manufacture the product. So, factory overhead. Say I will say for factory overhead is another 1,500 rupees. The total we get here is 6,000. This I am going to call as factory cost. So this is the actual expense a person incurred to manufacture the. Then there may be an expenditure relating to office. You pay salary to a chartered accountant. It is not relating to the product. It is relating to some strategies. The salary paid for the transportation. Everything will be in addition. So to this, I may need to again add administrative overheads. Right? I need to add my costs also. I have a chartered accountant. I have a corporate office. I have a vehicle for my CEO. All these expenses also I need to get from the customer. So this is another 500 rupees. 7,500. The allocation is completed. It is 6,000. Right? Cost of goods. So then I am going to add here selling and distribution. Like you put these products in a showroom, the rent of the showroom, salary of the showroom staff, you give free delivery from showroom to the customer's home, you transport goods, all these things you need to add. They are called as cost of selling and distribution overheads. Then you will call this total as cost of sales. So the ultimate product price has become 7,000 including all the expenditure, overheads, etc. Then you are going to add, I will write on the top, cost of sales was say 7,000. This is the only cost. You need to get some profit also. Now you add your profit based on your margin. So if you want 10% or you want 20% based on your margin, you add. So I will put here 700 as profit. So 7,700 has become 7,700 has become my sale value or selling price. That is how you are going to determine the selling price. You calculate the selling price and then only give the quotation. Without doing all this, you forgot an item and you quoted only 6,000 rupees, I will sell. But your ultimate cost is becoming 7,700. So you are going to incur loss. So that is why costing is more important. Before giving any commitment to a customer or before giving a quotation to the customer, you are going to prepare cost sheet and then decide what is going to be your cost of sales and how much margin you are expecting. Then give the selling price as your quotation. This is how you are going to do for every transaction in your company. So this is what I wanted to discuss. So we have completed the cost sheet. Thank you very much.